Hello, and welcome to another update video about the Doge chart. Here on the Dogecoin chart, yeah, we still haven't seen a 5-wave move up from the low. However, it is realistic that we could still see higher prices. Okay, we could still see higher prices. Let me explain the structure to you. It's a complex structure, and I will share with you two interpretations of the move up from the April low. I cannot identify this as a 5-wave move up, even though it is, well, let's say it's not my preferred interpretation, okay? You can count 5 waves clearly, visually, but it just doesn't align with standard Fibonacci guidelines. But my interpretation is that this here was the wave 1, this here was a wave 2, and now we are working our way up in a third wave. But this all has to be part of a diagonal pattern. So a wave up, and now it seems like we're going to test support again. So it would have to be some kind of a complex WXY structure, and the Y wave is an A, B, C. So all I'm saying is, to keep it simple, we can go higher from here, but it takes really a 5-wave move up, as shown here, to confirm that on the 7th of April a low has formed. Until we get confirmation, we can simply use the levels, to position ourselves for anybody who wants to trade this. It's not impulsive, so it's certainly a challenge. Diagonal pattern fits best here, in my view, at least as long as the 14-cent level is holding, because below 14 cents, we're going down too low for a clearly bullish thesis, okay? So below 14 cents, the bears are starting to take the lead. And it would be a C wave to the downside, yeah, within Y of B, which is part of the third wave to the upside. So next approach, or next turn, would likely be the start of a third wave. And then there would be another 4-5 pattern. So main takeaway is there is a support area between 15.28 cents and 14.14 cents, and it could easily be tested again. And a break below 14 cents would open the door to lower prices, potentially even a test of 12.6 cents and a break below the April low. So this is the support area to watch. For me, this area is where we can identify this is the area we can use to distinguish between bullish and bearish momentum. This is one scenario. Yellow is preferred for me. The white scenario, which I haven't actually added to the chart, but we can do that. White scenario would be all of this is wave 1, possibly even wave 2 is still unfolding, 3, 4, 5. So you see there isn't really much difference. So you might ask, what's actually the difference? The difference will be in how we measure support. It won't make a great difference. And also it will be in the structure to the upside, because the white count could actually be a diagonal. The difference is that white wave 1 would be a leading diagonal. The white wave 1 would be a leading diagonal, but the entire move up could be an impulse. So wave 1 is part of an impulse, wave 2, wave 3 could be impulsive, wave 4, wave 5. So it will have the difference, or it might make a difference on the micro level. And why is this possible, this count? Because you can say this is 1, 2, 3, 4, 5. I mean, that's possible. It's just not my preferred interpretation. In both cases, support would likely be tested once more. I would change my view here if the price breaks above 16.4 cents, the last high. Then the focus can shift to the blue target zone, but today's pullback looks a little bit as if support wants to be tested again. And I mean, what would be support for? So the current support is 14.14 to 15.28 cents. For the white count, we would leave a little bit more space, all the way down to 13.75 cents. So I can add that to the chart. It's just that please note that these levels are no invalidation points anyway. So if it's not a decisive break below 14.14 cents and we turn around there, it's fine, you know. Both counts essentially have a little bit more room below. However, really, to keep these scenarios alive, the yellow count shouldn't break below 14.14 cents and the white count shouldn't break below 13.74 cents. So that would be the line in the sand. 13.74 cents. The level that helps us distinguish between bullish and bearish momentum. Yeah, but overall, it's not great chart. Still, it's one of the charts where I consider a low might have indeed formed on the 7th of April. So I'm leaning towards that. The question is it the white or the yellow count? But I would have to change my view. Yeah, I would have to change my view about the reversal attempt to the upside with a break below 13.7 cents. Because as I said, that would be too deep for a B wave and also too deep for a wave 2. That's the update about Doge. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.